Hi everyone and welcome back for my final morning report analysis video on Tuesday the 4th of July with me, Rich Perry, market analyst at Hantech Markets. We're going to look at gold. And gold broke down sharply yesterday. This is not looking all that great now, is it? You had that sort of consolidation band 1240 to 1260 that I was talking about. I was saying that with this downtrend and the momentum indicators which were sort of deteriorating, it all looked like a downside break was likely, and subsequently we've had one. Now, break to the downside implies, I suppose, $21. So you measure that to the downside, that gives you 119. You've already seen that achieved yesterday. Sorry, 1219. You've already seen that achieved yesterday. Big strong bull bear candle, not very good at all. I've just talked through dollar yen, and it's interesting because we've broken a downtrend on dollar yen, and now we've broken an uptrend on the gold. So these safe haven plays are sort of not looking all that great. Yes, they are positive, or they've found a degree of support today, but I don't think that support is going to be sustainable. I think this is just a bit of a knee-jerk reaction to the Korean or the North Korean missile. I think ultimately it's going to roll over, and this dollar strength, which has hit the safe havens, yen and gold specifically, is certainly a big factor here. So breaking that uptrend changes the outlook. Once again, it looks increasingly corrective. I think a retest of that 113.80 level, the big May low, is now on. I don't necessarily think that this, as I said, this rally is going to last especially long. I suppose you could sort of say that initial resistance is around 1230. You sort of take that as the Marubozu line of yesterday's big strong bear candle, which is sort of the midpoint of the daily range. 1230, just 1226 at the moment. So I reckon anything around 1230 is probably where you'd start to see the resistance coming in. Interesting that that pretty much is where that 144-day moving average is as well now, having sort of broken sharply below that level. I think it looks increasingly corrective on the momentum indicators as well. I don't think it's especially positive for any sort of buyers of gold at the moment. So breaking down sharply below 1240. There is no real resistance on the hourly chart, you can see. Basically yesterday it just didn't stop all day, did it? It just kept going and going and going. Mild sort of consolidation around 1225 today, but I think ultimately any unwinding move, which this seems to be, is a chance to sell. So on the RSI, you've seen sort of 50 to maybe 60 capping the rallies on the hourly RSI in the last sort of few weeks. I think that's likely to continue. I think this little rally is another chance to sell, isn't it? 44 at the moment, just beginning to roll over on the stochastics as well. Yeah, it could be the limit of the rally. So I'm expecting further downside, retest of yesterday's low, 1218. Another test of that 1213.60 low from the May low. And then if that breaks to the downside, you're looking at 1195 and 1180 as the subsequent key lows from earlier in the year. So I wish you good luck in your trading, and I'll speak to you again tomorrow. Thank you.